Ladies and gentlemen, welcome back to the channel. We heard from Jerome Powell a couple of hours ago, and he did not send any massive warnings. It doesn't look like or sound like Jerome Powell is that concerned. If anything, he's actually pretty bullish right now. And I will share what Jerome Powell said with you here in this video and what this means for potentially a year-end rally, not just for the broader markets, but also for Tesla stock. So first things first, Powell says the US economy is in remarkably good shape. That's a good sign for this Friday's jobs report, because let's be honest, Jerome Powell already knows what the jobs report is going to be. He already knows the numbers. He said himself, he gets important jobs reports a couple days before everyone else does. Rightfully so. I mean, the last thing Powell would want to do is come out and sound super confident that the economy is just fine 2 days before an absolute disaster theoretical jobs report on Friday. So knowing that Jerome Powell knows what the jobs report is, the fact that he says the economy is in remarkably good shape means that we're not going to get some big disaster this Friday. We're probably going to get a really good number. And that in and of itself could likely boost markets higher. See, some of the concern today for investors was the ISM services report that showed big misses across the board for everything. Like the whole report, employment, new orders, prices, business activity, all of it was bad. The headline number was bad, missing by 3 to 4 points in every subcategory. Not quite negative, like manufacturing has been for 2 years now, but not that positive either. And that caused some concern today within the Russell, some of your small cap areas, some of the internals of our markets. As I reported previously, the equal weight S&P was actually red on the day today versus the headline S&P and the NASDAQ, which were green. The Dow was green, which really has to do with a handful of big tech names that really outperformed today. And then you have Salesforce that did very well on earnings, and that caused the Dow to be positive. But really strip out those names, and today was not a super positive day for equities. Now, Jerome Powell goes on to say that he feels very good about where monetary policy is. And there's clearly a reason why he's saying that. He is liking the data that he's seeing so far. That includes the services data that came out today, which I think Jerome Powell is probably happy about that, because that suggests that maybe the economy is not as strong as they think. Maybe that just does justify the Fed's recent actions in cutting rates, and perhaps that keeps a bit of a lid on inflationary pressures, but it's going to take many months to know that for sure. Jerome Powell says there is broad support in both parties for an independent Fed, and he does not think there is a risk of losing it. And that was really good news as well to markets, because the last thing you want is the government making decisions for the Fed. That would absolutely crash the markets if there is uncertainty about the Fed remaining, unpolitical. So I think that was also comforting for the markets that Jerome Powell's not worried about that at all. Jerome Powell says that Trump said the same things privately in his first administration as he did publicly. So he was not, backdoor, threatening Powell. Powell says we've moved very, very quickly with rates, showing a real responsiveness from the Fed. Jerome Powell said this: unemployment is still very low and making progress on inflation. That's a very bullish statement also. He says the economy is in good shape, second reiteration during the speech, and no reason that can't continue. According to the Fed Beige book, which also came out at the same time that Jerome Powell was speaking, this is something the Fed has said, hey, the data that we get from the government is mainly surveys that's kind of extrapolated, and that's not the most accurate data that we get. Jerome Powell has said repeatedly over the past 6 months, if you want more accurate data on what the economy looks like, just go look at the latest Beige book. And we got that came out today, like I said, when Powell was speaking. And according to the Fed Beige book, prices rose only at a modest pace across Federal Reserve districts. The Fed Beige book also says that economic activity rose slightly in most districts, which is good news. Jerome Powell said the Fed is trying to be in a middle place where policy is less restrictive so inflation can fall, but not damage the labor market. Jerome Powell said that they are modeling and looking at and evaluating tariff proposals, but there's really nothing they can do as far as implementing any of these, what could be policy changes. Until they know exactly what those policies are going to be from the new administration. Powell says higher immigration is part of the reason growth was strong in 2023, but still one of those things where you don't know how immigration will be next year, so it's hard to make an accurate assessment on what next year could look like. Jerome Powell also reiterates what he has said before. The U.S. budget is on an unsustainable path. Revenue and spending need to be better aligned. He says that Bitcoin is used as a speculative asset. It is a competitor with gold, not the US dollar. And Jerome Powell says US aggregate numbers are good, but pressure in lower income households, and really explaining why some people feel crappy about the economy. It's not because the economy really sucks, and specifically they were talking about inflation. It's because people look back 2-3 years ago and they're paying 20% more in some cases for the items that they need. And they don't like that. You can tell people the rate of inflation has come down, and that just doesn't really get registered. It's all about where prices are versus where they used to be. So I personally think it's just going to take some time for people to get used to, the higher prices. And that's when maybe the lower income consumer can start to rebound a little bit. And I'm optimistic that can be next year. And it sounds like Jerome Powell is also. Now, I always like to read you guys these Fed Beige books, not each and every single district, but the overall economic activity summary that you get on the top. And this just came out here today. It says, economic activity rose slightly in most districts. 3 regions exhibited modest or moderate growth that offset flat or slightly declining activity in 2 others. Though growth in economic activity was generally small, expectations for growth rose modestly across most geographies and sectors. Business contacts expressed optimism that demand will rise in coming months. Consumer spending was generally stable. Many consumer-oriented business across districts noted further increases in price sensitivity among customers, as well as several reports of increased sensitivity to quality. Spending on home furnishings was down, which contacts attributed to limited household mobility. Demand for mortgages was low overall, though reports on recent changes in home loan demand were mixed due to volatility in rates. Commercial real estate lending was similarly subdued. Still, contacts generally reported financing remained available. Capital spending and purchases of raw materials were flat or declined in most districts. Sales of farm equipment were a notable headwind to overall investment activity, and several contacts expressed concerns about the future prices of equipment given ongoing weakness in the farm economy. Energy activity in the oil and gas sector was flat, but demand for electricity generation continued to grow at a robust rate. The rise in electricity demand was driven by rapid expansions in data centers and was reportedly planned to be met by investment in renewable generation capacity in coming years. So pretty interesting. Employment levels were flat or up only slightly across districts. Hiring activity was subdued as worker turnover remained low, and few firms reported increasing their headcount. The level of layoffs was also reportedly low. Contacts indicated they expected employment to remain steady or rise slightly over the next year. So that's definitely good. But many were cautious in their optimism about any pickup in hiring activity. Wage growth softened to a modest pace across most districts, and did expectations for wage growth in coming months. Job growth and wage growth for entry-level positions and skilled trades were an exception, rising robustly and expected to grow further through next year. So shockingly a good Fed Beige book today. And that's a big improvement from what we have seen before. Now, the Beige book is important because it's really the Fed officials, Fed employees talking to business owners across America, like hundreds of business owners every month, and comprising this report. So if we think about government data, surveys that are surveying a couple hundred people and extrapolating that for everyone else in America, like your non-farm payrolls report, for an example, I think the Beige book is a lot more accurate talking to business owners, hundreds of them small, medium, large-sized businesses across the U.S. than surveys from a couple hundred people. Just my personal opinion, I do hang my hat literally more confidently on the Fed Beige book. And I do think as long as this Beige book is remotely correct with, their assumptions here, this is likely going to fuel a year-end rally as people become more optimistic. And as Jerome Powell alluded to, you're probably going to see a good jobs report. Jerome Powell gave us no reason to expect we're not going to have a good jobs report. Fed, I believe it was Waller or Kugler yesterday, also said that it's possible Friday's jobs report could be really strong, kind of like leaking that to us. Jerome Powell seems to have confirmed that exact same thing. So in terms of the rest of this week, I wouldn't bet against markets. And in terms of December, I wouldn't bet against markets, especially if we have a strong jobs report on Friday. That is exactly what the markets need to power higher here. And especially as JP Morgan and, other investment firms are starting to call for 6,300 on the S&P into year end, that's starting to look a little bit more likely. Now, Tesla is also specifically holding its upwards trend line. That is great news. We did find support here the last 2 days, and this should start to provide us a move higher as, potentially people start to position for 2025. Tesla is a clear winner. And I would also not bet against Tesla. Tesla could be at new all-time highs by the time we start 2025. So to me, it seems like Jerome Powell just validated the bulls even more. There was really nothing that was bearish. Like, even if you are a super bear, like, there's nothing you could point out besides maybe the Fed's going to be wrong and that was bearish with what Jerome Powell said. The Fed Beige book, it came out the best I've seen in the last couple of months. People are excited heading into 2025. I think there's a lot of reasons why people may put some of that $7 trillion to work, some of which may go into Tesla, some of which into small caps, mid caps, and cyclicals. And those are really the areas that I'm bullish on in December and into 2025. Now, I do think at some point in Q1 of 2025, we will have a correction, and that, will likely happen in my personal opinion. But just take a look at sentiment. Your different sentiment barometers as of right now. For the first time since April, there is more bearish investors than bullish investors in our markets, according to the AI Investor Sentiment Survey. That started a 5-month winning streak back in April of 2024 when again, you had more bears than bulls. That, I think, looks good. CNN's Fear and Greed Index today, hit 57, down from 62 just yesterday, barely in greed. You're almost in neutral. So the markets, yes, on a price basis, they are high. They have done well, but you're not that optimistic. And there's still a lot of bears, which could help fuel markets higher in December. So let me know what you guys think about this information down below in the comment section. Again, I think Tesla could easily be at new all-time highs by the time we start 2025, which I know is a short-term call. It sounds crazy to a lot of people. That's like $60+ of gain from here that is needed, but that's what seems likely to me. So thank you guys for watching. I gotta go tend to Boss Baby over here. He is not happy. Seems like ever. So you guys have a great day, and I will see you in the next one.